Fed Chairman Ben Bernanke makes a semi-annual trip up to Capitol Hill. Our Jessica Stone joins us here on the anchor desk with, of course, all the details. You're now our sort of economics editor, if you will, at least for this week.
And Ben Bernanke not making a ton of news, but you know, every time he's on Capitol Hill testifying, he makes news just by being there. And this time what we saw was that he actually released his testimony at 8:30 prior to a 10 o'clock testimony, that giving the markets a chance to move ahead of his testimony. But of course, they still closed just slightly up. So not a ton of movement on the market side, but we also looked a lot at the impact on Main Street. And I want to take a look now at a story that we prepared for you about a Virginia pawnbroker who says, you know, day-to-day living, he's very much impacted by what decisions are made at the Federal Reserve of the United States.
Thanks for calling Route 50 Gold. This is Ralph speaking.
At this pawn shop in the Washington, D.C. suburb of Falls Church, owner Kevin Odell cares what America's top banker has to say about keeping the U.S. interest rates low.
If it affects the gold price, and our business is gold, I mean, it affects us a lot. The thing that's sad is it shouldn't affect it. The market is what should affect it, and it doesn't. It's like what some guy says affects it.
We've had some success.
So when that guy, Fed Chairman Ben Bernanke, spoke on Capitol Hill Wednesday, the markets and the politicians paid attention. Bernanke signaled that the U.S. Central Bank will continue buying billions in Treasury bonds every month to encourage borrowing and spending.
Is it fair to say, though, that Wall Street has benefited more than Main Street has?
I don't think so. I mean, we're working through the mechanisms we have, which, of course, are financial interest rates and financial asset prices. But our goals are Main Street, our goals are jobs, our goals are low inflation, and I think we've had not all the success we would like, but we've had some success.
After Bernanke cut interest rates in 2009, Odell's business boomed as American consumers flocked to gold seeking higher returns and a hedge against inflation. But now gold is running around $1,200 an ounce, down from $1,900 an ounce after a big sell-off.
People come in, they still think gold is at an all-time high. It's not August of 2011 anymore. I wish it was, but it's not.
While Bernanke said the American economy is recovering thanks to a stronger American housing market and lower unemployment, he also said that interest rates would remain low even if U.S. unemployment dipped below 6.5%. It's currently at 7.6%.
People ask too much money, I think.
Back in Kevin Odell's pawn shop, the economic recovery looks much slower. He says since the gold rush, he's seeing fewer customers and more slowly moving merchandise. Odell says this diamond engagement ring has been sitting in his case for a year, even though it's the most popular size, clarity, and quality on the market.
I'm still seeing prices go down. I'm still seeing
prices. And what does that tell you?
That tells me that this recovery is artificial. That's what it tells me. It's artificial recovery.
Now, of course, Chairman Bernanke prefers to call it a moderate recovery, which, of course, is still moving forward despite major government budget cuts and job reductions for government employees. The open question, of course, is how will those budget cuts impact the U.S. economy over time? And, Phil, will we see a spike in inflation?
Okay, we need your help desperately here, because the million-dollar question that investors around the world are asking is, did Ben Bernanke tell us when this tapering or this cutting off of the stimulus might begin?
I actually think he reversed slightly from his more forward position in June, where he said it was going to happen more quickly and towards the end of the year. Some analysts think it could start as early as September, possibly December. We heard the Chinese ask for an early exit when they were here last week. So I think the world is watching what happens and wants to be sure that what happens is done with an eye towards the international markets.
And the world keeps on guessing. Jessica, thank you very much.